Welcome back to channel. Today we're diving into one of the biggest debates in the investing world, dividend stocks versus dividend ETFs. For years, investors have been split into two groups, each firmly convinced their strategy is the smarter and more profitable path to long-term wealth. But instead of relying on opinions, I went deep into decades of verified performance data, payout histories, volatility trends, and real-world results. And honestly, the findings were far more surprising than I expected. So in this video, we're breaking everything down clearly, simply, and with actual numbers to settle this argument once and for all. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. Let's start with the basics. Dividend stocks are individual companies that pay a portion of their profits to shareholders. Companies like Coca-Cola, Johnson & Johnson, Pepsi, and Procter & Gamble. These are long-standing businesses with stable cash flows and consistent dividends. Dividend ETFs, on the other hand, are funds like SCHD, VYM, or DVY that hold dozens or even hundreds of dividend-paying companies in a single package. With individual stocks, you choose the companies. With ETFs, the fund chooses them for you, giving you instant diversification. Now, when it comes to performance, this is where the debate gets interesting. Historically, broad dividend ETFs like SCHD have delivered strong, stable, long-term returns, often outperforming the average investor who tries to pick individual stocks. But here's the twist. If you pick the right individual dividend stocks, especially dividend kings and consistent growers, they can outperform ETFs significantly. The challenge is that most investors don't pick the winners. They chase high yields, fall for unstable companies, or panic during downturns. That's why ETFs often win for the average investor, not because they are inherently better, but because they protect you from your own mistakes. Next, let's look at dividend growth. Individual blue-chip companies like Pepsi, McDonald's, Microsoft, Apple, and Johnson & Johnson have decades of uninterrupted dividend increases. Their payout growth can be incredible over time. Dividend ETFs also grow dividends, but usually at a steadier, slower pace compared to the very best individual companies. So the pattern is clear. Individual stocks offer more upside, while ETFs offer consistency. When we talk about risk and volatility, the winner is obvious. Dividend ETFs are safer. Since they're diversified, a single company's failure barely affects the fund. But with individual stocks, one bad earnings report or scandal can hurt your entire portfolio. If your goal is stability and sleep well at night investing, ETFs come out ahead. There's also the convenience factor. ETFs are easy to manage, easy to rebalance, and often more tax efficient. You don't need to track earnings, study balance sheets, or monitor company news. On the other hand, picking individual stocks requires research, discipline, and emotional control, especially during market downturns. If you enjoy this process, great. If not, ETFs save you a lot of time and stress. So, which one should you choose? Choose dividend ETFs like SCHD or VYM if you want simplicity, lower risk, instant diversification, and long-term consistent performance without much effort. Choose individual dividend stocks if you enjoy research, want higher potential returns, and like building a custom dividend portfolio that grows over the years. And remember, you don't have to choose only one. Many smart investors combine both, using ETFs for stability and individual stocks for extra growth. In conclusion, dividend stocks offer higher long-term potential if you know how to choose them, while dividend ETFs offer stability, simplicity, and reliable passive income without the stress. It's not about which is universally better. It's about which strategy fits your personality, your patience level, and your long-term financial goals. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you don't miss any updates. See you in the next video.